Hey guys, what's going on? It's Rekt Capital. Welcome back to the Rekt Capital channel. Thanks so much for joining me in today's video, and we're going to focus on two weekly exponential moving averages which actually constitute the death cross or the golden cross, but we're not going to be focusing on these crosses in this video. In the next one, we'll focus on the death cross and whether that death cross is looming or not. So subscribe to the channel to stay tuned for that one. In today's video, we're going to focus on these two moving averages separately because they hold a lot of insight into what to expect from the market in the short term, and if things go terribly wrong, which is of course the worst case scenario, what else could we potentially focus on going forward? So in any case, subscribe to the channel for more videos like this in the future, and let's dive right into the video. So the blue line right over here, the exponential moving average, the 50-week exponential moving average, is an important level of historical support. And we're going to focus on a few periods in time where this 50-week exponential moving average was forming a support, holding as a support, including now. And I'm going to just share my thoughts about what this could potentially mean going forward. So in 2013, we saw a bull market top occur, then a crash, but ultimately Bitcoin was above this 50 exponential moving average, holding its momentum, essentially speaking. Even though we saw a significant crash, we were still holding that bullish momentum, at least in the context of this 50 EMA, and we were able to not necessarily test this EMA as a support, but be very close to doing so. And in doing so, notice how this wick is lower to this wick. So essentially we get a higher low right over here relative to that 50 EMA. And we preserve that bullish momentum despite a hefty discount, a hefty crash. And then we rally towards the upside. And this 50 moving average forms as a support, rebounds, but then actually turns into a resistance before rejecting towards the downside, figuring as a resistance once again, and then being a resistance consecutively before finally reclaiming this 50 EMA as a new support, and then doing so here, even here as well, before continuing its cycle to new highs, the 2017 highs right over here. And one of the things to bear in mind, and which are really interesting, in a sustained bull market, you can have a crash period, which is very deep, but as long as this crash period maintains itself above this indicator of bullish momentum, the 50-week exponential moving average, we can have that momentum still preserved and the price rally could actually continue afterwards. So just to reiterate, we can have a crash, but as long as it stays above this bull market indicator, we can just have this crash figure as a really hefty discount and really strong cool down period before actually continuing towards the upside. In a bear market, however, we will rebound from this 50 exponential moving average, but that rebound will be limited, and in fact we will lose this level as a support, and then it will turn into a resistance to just confirm a new bear market. And on the back of that bear market right over there, the 200 exponential moving average will figure as a key support. So if we can't find support at the 50-week exponential moving average, one of the best ROI opportunities, maximum point of financial opportunities, would be at the 200 exponential moving average. So to continue on this, so just to summarize, we focus on these periods, on when we see a bull market get preserved even though there's a crash, a bear market occur after a pitiful rebound, but then a loss of that and then turning of the 50 exponential moving average into a new resistance, and then the 200 weekly exponential moving average presents a fantastic financial opportunity before the new bull market occurs, where this 50 exponential moving average turns back into support before new highs. Let's focus now on these periods. So essentially we've just focused on the first half, and now let's focus on the second half where we see really important support bounces. This is the 2017 bull market high. We reject from those new highs, test this 50 exponential moving average as a support, and then rebound a few times, but ultimately we lose it, hover below the 50 EMA, and then ultimately reject from it. So you're seeing that this 50 EMA is a support, or at least lost as a support, turning into a resistance, a crash, and then the 200 exponential moving average actually comes to the rescue, but not necessarily as a support. It forms a consolidation period with this 200 EMA on the weekly figuring as a very key resistance, holding back Bitcoin before a new bull market. And once we gain the 50-week exponential moving average back as a support, we see a bull trend occur. And the same exact situation is right over here. Dipping below the 200 EMA is an outsized opportunity for financial investors in Bitcoin. You can see right over here, dipping below the 200 EMA and dipping below the 200 EMA and forming a consolidation period right over there. These are fantastic opportunities for Bitcoin. And once we dip below the 200 EMA and reclaim the 50 EMA, that's when we see a bull market occur. And in fact, you see higher lows relative to this 50 EMA. So just giving you guys that context, we have now crashed a 50% amount, 53%, and we're holding this EMA right now as a support. And whether or not we get a bear market, and it doesn't even have to be a long bear market necessarily, but if we do get a pitiful rebound before breaking down from the 50-day exponential moving average, then we will see this cool-off period take a little bit more time and decline below this 50-week exponential moving average. But if we can actually maintain this level as a support, then we could get something similar to what we saw right over here, where we see a massive crash in 2013, but ultimately we're staying above the 50-week exponential moving average. So this period in price action just showcases to us how a 50-week exponential moving average can showcase itself and present itself as a support to just preserve the bullish momentum despite a strong crash. But a bear market is probably confirmed once we rebound from the 50-week exponential moving average, but to no avail, a very little rebound before actually breaking down from this 50 exponential moving average and then turning it into support, or at least resistance, losing it as a support, and then declining lower. So it's really important for the 50-week exponential moving average to just showcase and present itself continuously as a support to just preserve this bullish momentum, even though we've seen a strong crash. Really important that this support holds, because that's what's preserving the momentum in this market at the moment. And historically speaking, breaking down from here hasn't always led to a revisit of the 200 exponential moving average, but whenever it has, we have seen fantastic opportunities for Bitcoin. On this occasion, a rebound from the 200 EMA as a support, and a consolidation period below this moving average as well, and then a harsh dip below it, but then a recovery. So this 200 EMA, when things get really, really sour, that's when we can see a fantastic financial opportunity there. But there's no need to jump to that conclusion, because we don't always get that sort of reaction from the 200 EMA, specifically the 2013 market cycle being a very valuable exception, where we see a crash, but this bull market momentum continuing and being preserved and sustained via the 50 weekly exponential moving average. So there's no need to rush to the conclusion that we're going to now reach 18K or 15K, especially since 20K is the previous all-time high for Bitcoin, and those levels, historically speaking, very rarely, they never get retested as a support. So really important to not just jump to this conclusion, because at the moment we need to see how this moving average continues to figure as a support. And if it produces a strong reaction, then that's extremely positive, especially if we get some really cool weekly closes above very key levels like 38K and 44K. That's when Bitcoin could actually be able to revisit the highs right over here. So this is now really positive at the moment because we're seeing not only this low and a higher low and another higher low happening right over here. So micro higher lows, essentially a 3-week micro higher low, but we're also seeing a higher low on the macro scale, right? This candle body is higher than this candle body. So there's a macro higher low, a 3-week micro higher low, and it's resting on the 50-week exponential moving average, which has been a really key indicator for preserving bullish momentum, even though we see extensive crashes. So really important that we hold here, and if we can get a strong rebound, that would be enough to save this bull market. But if this is going to be a weak bounce, then we could be in danger of losing this 50 exponential moving average as a support and then turn the exponential moving average into resistance before rejecting to lower levels, which would actually be presenting to us a really cool financial opportunity. But until then, no need to jump to those conclusions, especially to the bearish euphoria conclusions where loads of people would be really interested in this outsized ROI of an opportunity, maximum financial opportunity, hoping that things really do get that bad that we revisit the 15,000s. I think that's unlikely, especially at this point. That's a low probability event. But nonetheless, it's a valuable insight to bear in mind because this 200 EMA has already been a valuable point of contact and support over the years. But then again, no need to rush to that conclusion. This is the most important EMA at the moment for the current bullish momentum. Can it be preserved? And that's about it for today's video update. I'm going to be talking about these EMAs in the context of the incoming Def Cross and my thoughts about the Def Cross. So subscribe to the channel for more videos like this in the future. Like this video if you enjoyed this one. Thanks so much for joining me in today's video. I hope you have a wonderful day going forward. Thanks so much. I'm Rekt Capital. Speak to you in the next one. Speak to you soon.